Good morning. I hope you're doing well, and happy Friday to you guys. It's January 5th, 2018. My name is Alejandro Zambrano, Chief Market Strategist with TradeCaptain.com. I'm going to provide you guys with a quick update on the markets. I'm going to take a look at things like the euro dollar, Bitcoin, crude oil, gold, and the DAX 30. And this is something we do Monday to Friday on the live trading room here at TradeCaptain.com. If you have a YouTube account, don't forget to log in and say hello, like this gentleman over here. That's always nice. And as well, if you have a YouTube account, don't forget to subscribe to our YouTube channel. Now today we are on Periscope as well, so I want to welcome everybody that is on Periscope. And thank you so much for joining us this morning. Again, if you like this, don't forget to check out TradeCaptain.com because that's where we host these webinars Monday to Friday. Okay, good. Let's begin. But before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we make money, which is obviously the reason why we're here, but we also can lose money. And that's really important that you understand that, especially if you're new to the markets. A lot of people think it's extremely easy to make money on, say, Bitcoin or the euro or the DAX or other markets, but it's also easy to lose money. So please bear that in mind. Okay, let's begin. So today is a big day. Today you have the non-farm payrolls out at 1:30 p.m. GMT. So that's 1:30 p.m. London time. Now the market anticipates most likely some strong numbers. Why? Because yesterday's US ADP numbers were better than expected. So if we have strong numbers from the US, and by strong numbers, we can just look here at the economic calendar. We can see that the anticipated outcome for this month's non-farm payrolls is 109,000. So if we have higher numbers than that, maybe 200,000, maybe 220, 230,000, that's probably going to give the dollar a bit of a fire, and kind of kick off and start to gain against the euro. On the other hand, if it's lower than that, then it's likely that the dollar is going to soften. Now, it's not just the only thing you should watch. You should also watch wage growth, because that's really, I think, where the Fed is interested in. They want to know that wages are picking up. Last time in November, we saw a wage growth of 2.5%. And this time around as well, it's anticipated to be at 2.5%. Now, I think what you're looking for here is you're looking for maybe wage growth being closer to maybe 2.7, 2.8. The actual upper end of this range is 2.9. So obviously, if inflation will be higher than 2.9 levels we reached in January last year, then you'll see some very strong dollar gains. However, though, if all of these numbers are a bit weak, then the dollar could soften. If you want to know more about the non-farm payrolls, we are hosting a live webinar where we're going to cover this. I have access to a Bloomberg platform, so we're going to get the data before it reaches a lot of the simple websites online. It's free to join. Just click here on upcoming webinars. You click up here, education, and then you can read more about it here. So again, if the data is good, we're probably not going to break the upside. The market could potentially go to the downside, and then maybe around 1975, maybe 19. It all really depends on how good the data is. Traders might look to go long with stop downs here. On the other hand, the data is bad, and this market could head to the upside. So that's what I want to say. Bullish on a break to the upside. Bullish from this lows here. I think stops are going to be down at 1845. However, though, you need to make sure that it kind of agrees with the data. If it doesn't agree too much with it, if the data is not too much different from the anticipated outcomes, then you stick to the technicals. In fact, the technicals are more important most of the time anyway. Next up is price of Bitcoin. So this is Bitcoin, and as you know, we had that big decline in December. That was an opportunity to buy Bitcoins, and we said that around 14,000 probably traders gonna look to buy. Right now the coin is up with $1,500 from the entry level that we discussed, and good for us today. The market is trying to break the upside. That's really good, because that tells me that we could potentially have left behind this corrective move. And if you watch other coins, you can see Ripple, you can see Ethereum, and I think there's a few more as well, Monero. There's some of these bigger coins that have ended their downtrend already, and hopefully we're going to see now Bitcoin catch up with these other coins. So no real change to the outlook. If it comes down to 14,000, I'm gonna be bullish, but for now you just need to hopefully just keep this, goes to the upside. If we check out this level here at 16,336, I think that's gonna fuel even more momentum. I'll bet you that some traders that bought here are probably gonna buy a little bit more here, so they add to this winning position, and then we'll go to the upside. And then eventually, obviously, when we take out this level, most likely traders are probably going to reduce their stop levels from 11,132 to maybe down to 11,900 and 11,002, 12,000 to be rounded off here. Okay. Here's crude oil. Crude oil, we had an amazing setup here, amazing trend. We obviously had the breakout in the quiet period on the 26th, and I hope this, if you took time off, obviously it's fine to take time off, and you should take time off. I did take time off, but I was still watching the markets. Logging in when you wake up, obviously you sleep in a bit over the time off, but still watching the markets a bit. And here we had a nice breakout. As you might remember, I said ignore this for a long time. Then we breached the upside and went all the way up to the targets. Now this 61.74 level is a major high, and I suspect that because we breached this, that this market could potentially continue to head to the upside. You have several targets here. I'm not gonna bother to look on the daily chart, you can do that yourselves, but 68.50, 75 and 77 are levels to watch, and levels to target. Now we haven't really corrected any we haven't corrected or given back any of the gains lately, so this is not the time to buy. It's time to book profits in the short term, and I look for a pullback down to 60.81, maybe $60 per barrel, and then be bullish from these levels. And I suspect that as long as should below these levels, in my case 58.97, then I think traders are going to continue to buy. Okay, here's the price of gold, and gold is bullish, but when you look at it from a big picture perspective, there's not much happening here. I think you're better off not trading this until we breach 13,074, 1374. Take out this high, and this market could continue to rally to the upside. Maybe we'll reach 1795. And what is really interesting is this. Crude oil that we just watched. Well, crude oil here in 2017 in June was at 42. Now it's up with 47%. So energy bills across the world are gonna go to the upside. There's gonna be more inflation because of this. So we have the European inflation numbers coming up this morning. Well, things like that are gonna pick up even more. That's gonna cause maybe interest rates to move up, but initially people buy gold as a hedge for inflation. So if inflation starts to pick up, I mean in particular in the US, unemployment rate is so low, inflation could really soar over there, then maybe we'll have gold breaking the upside here. So it's interesting times happening. The move in crude oil could potentially trigger a break here in gold if people start to get afraid about inflation. Alright, next market up is the DAX 30, very popular market that people trade. The market here is kind of trapped between these levels, and this is a daily chart. I think it makes sense to trade the daily or work with the daily because the market has been chopping around here and it hasn't been consistent in its moves. The only consistency here is they've been trapped within these range. What you're looking for here, I think, is a break to 13,343. Okay, take this level out and this market could move to the upside. I think that makes perfect sense. Take a look at the S&P 500 as an example. Let's see if I can load it here. Actually, let's load my little list here. This is the S&P 500. Look at that beauty. I don't know if you traded, but you know, I've been very bullish here. Nice bullish market. We said people go long here, and then we said look to add here for this to head to the upside. It's looking great. Here's something to better focus on instead of the DAX. Other stuff I'm watching is the Japanese market. Actually, let me load this one here. There's the Japanese market. You can see how we just had a nice break to the upside here. 5% up. Obviously pulls back. Traders might look to buy again. So you have all these moves in the stock markets. The DAX, of course, is being a bit tricky, but eventually I would guess it needs to catch up. Okay, that concludes today's market update. Join me here at tradecaptain.com and the live trading room Monday to Friday at 9 AM London time for an update like this one. I'm on Periscope today, but I'm usually on Periscope maybe once a week or a few times a month. So if you're new to this, you're watching this on Periscope, check out tradecaptain.com for your update on euro, dollar, Bitcoin, gold, crude oil, and the DAX 30. We have also other services in the premium section. We have a bunch of news as well. We have a great team. They're up really early in the morning from 5 AM London time to start to produce content, so you know what's moving the market and what people are watching before the London session kicks off. We do have the education stuff here, trading guides, videos. In fact, we have a new little PDF which I suggest you download and read over the weekend. Is this one, the political roadmap for 2018. It's a nice little overview. We look at the Italian election, the Russian election, the US midterms election, Mexican election, and we also look a bit at Brexit. It's good to give you an idea really of how to position yourselves and how to watch the markets over the next few months. It's free to download. You just need to create your free account with tradecaptain.com and download a demo account from Manning Capital. And that's it, guys. If you have any questions, well, here's my handle. Actually, I got rid of it. It's on the live trading room. It's at AlexFXOO. And again, don't forget to sign up for the US NFPs this afternoon. If you sign up once, you'll have access to all these different webinars. Have a great day and happy trading.